Did you know some Florida homeowners just saw their property tax bills drop by thousands overnight? Others, however, were blindsided with unexpected hikes. It's not a glitch and it's not a joke. Florida's property tax system is going through one of the most dramatic overhauls in decades, and if you own a home in the state, your wallet is about to feel it. Some counties are seeing exemptions expanded like never before, while others are tightening their rules in ways that could leave you paying more. What's behind all of this? A wave of new rules, bills, and proposals quietly passed or pushed forward. Some already active, others heading to your ballot this year. Lawmakers are racing to rework how property taxes are calculated, who gets exemptions, and how fast local governments can raise your rates. The problem? Most homeowners don't even know these changes exist. In this video, we're breaking down 10 game-changing property tax rules in Florida that are turning bills upside down. Some are offering jaw-dropping savings, while others carry hidden consequences that could hit your pocket hard. Whether you're a longtime homeowner or just bought your first place, what you don't know could cost you. Stick around, because your next tax bill might look very different. Number 1. Elimination of non-school property taxes. One of the most shocking and controversial proposals making waves across Florida is the potential elimination of all non-school property taxes. That means taxes you currently pay to fund local services like libraries, parks, fire departments, and public works could completely vanish. The idea is simple but powerful. Keep property taxes limited only to public schools, and eliminate everything else. Supporters say this could lead to immediate, dramatic reductions in property tax bills across the state, giving homeowners thousands of dollars in yearly relief. In some counties, that could mean slashing over 60% of a typical tax bill. The goal behind this move is to reduce the growing burden on homeowners, especially as property values and tax assessments continue to skyrocket. With Florida's population booming and inflation impacting family budgets, legislators argue that now is the time to scale back government's financial grip. But here's the catch. If local governments can't collect taxes, they still need to fund vital public services. That means they'll either need to cut budgets or find alternative revenue sources, such as higher sales taxes, service fees, or special assessments. In other words, while your property tax bill might shrink, that money could be coming from your pocket somewhere else. For homeowners, this rule could be a blessing or a ticking time bomb. If it passes, many Floridians could see their next tax bill drop significantly. But without knowing how counties will respond, it could also lead to reduced public services, slower emergency response times, or even higher costs elsewhere. The real question isn't just how much will I save, it's what am I giving up in return? This change is bold, dramatic, and filled with unknowns, and it's already started gaining serious traction in state legislative sessions. Number 2. Phased elimination over 10 years. Rather than slashing property taxes overnight, some lawmakers are pushing for a more gradual, but still powerful, change. A phased elimination of property taxes over the next 10 years. Under this plan, homeowners would receive an additional $100,000 in exemptions each year, slowly reducing their taxable property value until their bill is reduced to nearly nothing. Imagine watching your tax burden drop year by year, a built-in discount that compounds annually, giving you more breathing room in your budget without the shock to public services that a full repeal would cause. This approach is being described as a tax taper, easing homeowners into lower bills while giving counties and cities time to adapt. Supporters argue it's the responsible middle ground between tax relief and public funding. By gradually reducing property taxes, local governments have a decade to rebalance their budgets, find new revenue streams, or reprioritize services. It also allows the state to measure impact step by step rather than taking a risky all-at-once leap. In theory, it's a win-win. Homeowners save money over time, and essential services aren't cut off abruptly. But this slow-burn solution has some potential downsides. Because it spreads out over 10 years, renters may not benefit at all. Landlords may pocket the tax savings without lowering rent. Also, new homebuyers entering the market midway through the phase-out might face confusion over their exemptions or find themselves paying more than neighbors who've owned their homes longer. Still, for existing homeowners, this plan represents a major opportunity to build equity and reduce long-term housing costs, especially in a state where property taxes have steadily risen alongside home values. It may not be fast, but the long-term reward could be massive. Number 3. Expanded tax relief for homeowners age 65 and older. Another rule that's turning heads across Florida is the proposal to dramatically expand property tax relief for homeowners age 65 and older. Under this change, qualifying seniors could see non-school property taxes reduced or completely eliminated, especially for primary residences. For retirees living on fixed incomes, this could be life-changing. As insurance costs, medical bills, and everyday expenses rise, many seniors have struggled to keep up with increasing tax bills, even when their homes are fully paid off. This rule is designed to help them stay in their homes longer without financial pressure. The reasoning behind this proposal is both economic and demographic. Florida has one of the largest senior populations in the country, and lawmakers argue that protecting retirees helps stabilize communities. When seniors are forced to sell due to rising taxes, neighborhoods lose long-term residents and local economies take a hit. By easing the tax burden, the state hopes to reduce displacement and give older homeowners a sense of financial security. In some versions of the proposal, eligibility would be tied to income thresholds, ensuring the relief goes to those who truly need it most. However, this rule also raises important questions. If seniors pay significantly less in property taxes, the cost of maintaining local services must be redistributed, often to younger homeowners or future buyers. There's also concern that counties with large retiree populations could face serious revenue shortfalls. Still, for millions of Florida seniors, this proposal could mean the difference between aging in place and being forced out by rising costs. If passed, this rule wouldn't just lower tax bills, it would offer peace of mind at a stage of life where stability matters most. We'd love to hear your thoughts. Which of these tax changes do you support, and which ones make you nervous? Drop your take in the comments below. We read every single one. And if you found this video helpful, check out our last video, Florida Insurance Shocks. What you need to know? It's a must-watch. We pour hours into researching and simplifying these updates for you, so if you appreciate it, please subscribe. It's just one click, but it means the world to us. Number 4. Expanded homestead exemption, a bigger break for everyone. Get ready for one of the most talked about changes in Florida's property tax system. The plan to expand the homestead exemption in a big way. Currently, Florida homeowners can deduct up to $50,000 of their home's value from taxation. But under the new proposal, that exemption could be replaced by a far more generous system. Instead of a flat number, homeowners could deduct up to 25% of their home's value. That means if your home is worth $400,000, your taxable value could drop by $100,000, doubling the current benefit and delivering serious savings on your tax bill. This proposal is gaining strong support because it's simple, fair, and easy to understand. Everyone with a primary residence would qualify, and the percentage-based exemption helps keep pace with rising property values. For middle-class families and first-time buyers, this change could make homeownership more affordable and sustainable, especially in counties where home prices have doubled in the last decade. It's also being seen as a way to counterbalance the impact of inflation and runaway insurance premiums, which have left many Florida homeowners financially stretched. However, not everyone is on board. Critics argue that this expanded exemption could shrink local budgets, especially for counties already struggling to fund essential services like public safety and infrastructure. If passed, cities may need to raise millage rates or cut programs to make up for lost revenue. Still, for everyday homeowners, this rule feels like a direct win. It's one of the few proposals that could bring tangible, immediate relief without complicated requirements or fine print. If you're living in your home, this rule is designed to put money back in your pocket, and it might be closer to becoming law than you think. Number 5. Insurance-linked exemption boost, rewarding the covered. In a bold attempt to encourage responsible homeownership and tackle Florida's insurance crisis, lawmakers are proposing a new rule that ties property tax exemptions to home insurance coverage. Under this plan, homeowners who maintain valid and up-to-date property insurance could qualify for an additional $100,000 exemption on their taxable home value. That's on top of existing exemptions, potentially lowering a tax bill by thousands. With insurance premiums in Florida among the highest in the nation, this incentive could help ease the financial pressure while also rewarding homeowners who stay protected. This rule is being viewed as a creative solution to two major issues at once: skyrocketing property taxes and the growing number of uninsured homes. After several hurricanes and the collapse of multiple insurance providers in recent years, the state has been battling to stabilize the home insurance market. By linking tax relief to insurance, lawmakers hope to push more residents to carry coverage, which not only protects the individual but strengthens the housing market as a whole. It's a smart way to use tax policy to nudge behavior in a safer direction. But the proposal is not without controversy. Some argue it penalizes those who can't afford insurance in the first place, especially low-income homeowners or seniors living on fixed incomes. Others question whether it's fair to tie two separate financial systems together. Still, for those who already carry insurance, or are planning to, this could be a massive financial bonus. If this exemption passes, it means being insured won't just protect your home, it could put real money back in your pocket every year. And for many Floridians, That's the kind of reward that makes paying those high insurance premiums a little easier to swallow. Number 6. Save Our Homes Portability Expansion. Take your tax break with you. One of Florida's most popular homeowner protections is the Save Our Homes cap, which limits how much your home's assessed value can increase each year, even if the market value skyrockets. But until now, that benefit was mostly locked to your current home. Enter the new proposal, a full expansion of Save Our Homes Portability, allowing homeowners to transfer all their accumulated tax savings when they move to a new primary residence. No more caps, no more restrictions. Here's why this is such a game changer. Under the current system, you can only transfer up to $500,000 of that tax protection when you buy a new home. But with rising prices across the state, that limit is outdated. The new rule would let homeowners bring their entire tax benefit with them, even if their next home is more expensive. This gives people the freedom to relocate without getting hit with a surprise tax hike, and it could be especially helpful for retirees, downsizers, or families moving for work or school. Of course, not everyone will benefit equally. This expanded portability mostly helps long-term homeowners who've built up years of tax protections. First-time buyers or those who recently entered the market won't see much change. Still, it's a powerful move toward fairness, rewarding those who've played by the rules and stayed in the system. It also encourages mobility within Florida, allowing families to move closer to jobs, schools, or medical care without facing a punishing jump in taxes. If you've lived in your current home for a while, this might be one of the most valuable changes headed your way. Number 7. Modified assessment caps, slowing down the climb. One of the more technical but deeply impactful proposals in Florida's property tax overhaul involves changing how fast your home's taxable value can increase each year. Right now, thanks to the Save Our Homes amendment, your home's assessed value, the number your taxes are based on, can only rise up to 3% annually, even if your market value skyrockets. But new proposals aim to reduce that cap even further, possibly to 2% or less, making it harder for tax bills to balloon year over year. The goal is to offer more protection for homeowners in a rapidly inflating market. In recent years, some Florida neighborhoods have seen home values jump by 20 to 30% annually, pricing out residents and making tax bills unpredictable. Even with the 3% cap, long-term homeowners are feeling squeezed. Lowering the cap would slow the growth of your taxable value, meaning your tax bill stays more stable, even if your home's market value soars. This is especially helpful for those on fixed incomes or anyone planning to stay in their home long-term. However, critics warn that lower caps can strain local budgets and create tax inequities between new and long-time homeowners. Someone who just bought a home may pay significantly more in taxes than their neighbor, simply because their assessed value resets to market rate. It's a trade-off between stability for the individual and fairness across the community. Still, if you're looking to stay put and avoid yearly tax hikes, this rule could lock in meaningful savings for the long haul, a small tweak with potentially big long-term impact on your wallet. Number 8. Two-thirds vote requirement for tax increases, making it harder to raise your rates. This next proposal is all about putting more power back into the hands of taxpayers by making it harder for local governments to raise property tax rates. Under the new rule, any proposed increase in property tax rates would require a two-thirds supermajority vote, not just a simple majority. That means city councils, county commissions, and school boards would need broader consensus before they could bump up your tax rate. It's a strategic way to slow down rapid tax hikes and make sure increases are truly necessary and widely supported. Why does this matter so much? Right now, many local tax rate changes only require a basic majority vote, something that can happen quickly, sometimes even without full public awareness. This rule would force transparency and wider agreement, ensuring that any tax increase reflects the will of the community, not just a few elected officials. It also acts as a speed bump in the system, giving homeowners time to respond, attend meetings, or organize opposition if they feel an increase isn't justified. Of course, there are concerns. Some local leaders say this rule could paralyze budgets, especially in emergencies or rapidly growing areas that need more funding for infrastructure, schools, or public safety. But supporters argue that too often tax increases happen quietly, and this would finally require officials to earn broader support before reaching into your wallet. If passed, this rule would add a powerful layer of protection between you and rising rates, making your property tax bill not just a local decision, but a community commitment. Number 9. Changes to the millage rate approval process, slowing down sudden spikes. Next up is a behind-the-scenes rule with a big impact on your tax bill. A proposed change to how local governments approve millage rates, the rates used to calculate how much tax you owe based on your property's assessed value. Right now, city and county officials can adjust millage rates fairly easily during annual budget meetings. But this new proposal would tighten the process, requiring more public notice, longer review periods, and potentially voter input before new rates can be approved. Why does this matter? Because even if your home value stays the same, a small increase in the millage rate can lead to a much higher tax bill. And in many cases, these changes happen quietly, passed in midweek meetings or buried in dense budget reports. By making the process more transparent and deliberate, lawmakers hope to give homeowners more time to react and respond, while preventing sudden jumps that catch people off guard. The real benefit here is control and clarity. With more oversight and a slower approval process, local governments would need to justify any rate increase more thoroughly. Homeowners would have more opportunities to attend hearings, ask questions, and push back if the increase doesn't make sense. It doesn't eliminate the ability to raise taxes, but it puts more guardrails around how and when it happens. If you've ever been surprised by a higher tax bill with no idea why, this rule is designed to stop that from happening again. It's about creating a system that's not only fairer, but more accountable to the people it affects most. Number 10, ballot vote requirement, letting the people decide. After all the proposals, exemptions, and technical changes, here's perhaps the most important piece of the puzzle. Most of these new property tax rules can't happen without your vote. That's right. Under Florida law, any major amendment to the state's tax system requires at least 60% voter approval to be added to the Constitution. So while lawmakers can draft bold ideas and committees can debate them all year long, in the end, it's the people of Florida who will decide what actually becomes law. This rule gives Florida homeowners an incredible amount of power. You're not just a taxpayer, you're a decision maker. Whether it's expanding the homestead exemption, limiting tax hikes, or eliminating non-school taxes, you'll be the one checking the box when these items appear on the ballot, likely as early as this November. The challenge? Many voters won't even know what they're voting on unless they've followed the news closely. And with complex legal wording, it's easy to miss the real impact behind each amendment. That's why staying informed is more important than ever. These tax changes could save you thousands, or shift the funding balance for your local community. So before you walk into the voting booth, know exactly what's on the line. The state is asking you to choose how property taxes work in Florida for the next generation. This isn't just about bills and percentages, it's about shaping the future of your neighborhood, your budget, and your home. And now that you know what's coming, you'll be ready to make that decision when the time comes. Florida's property tax system is standing at a crossroads, and whether you're a longtime homeowner or just bought your first place, these changes could dramatically impact your financial future. From expanded exemptions to lower assessment caps, phased reductions, and voter-approved protections, the rules around what you owe, and why, are shifting fast. And while some of these proposals could put real money back in your pocket, others come with trade-offs that could affect everything from local services to home resale values. The truth is, many homeowners won't even realize these changes are happening until they open a tax bill that looks very different. That's why now is the time to get informed, stay involved, and speak up. Whether it's attending local meetings, checking your county's proposed millage rates, or preparing to vote on statewide amendments, your voice and your choices matter more than ever. These aren't just policy tweaks, they're decisions that could shape the future of housing, affordability, and community life in Florida. If this video helped you understand what's coming, give it a thumbs up, subscribe for more updates, and drop a comment below. Which of these rules do you support, and which ones worry you? Remember, your next tax bill could look very different. But now you'll know why.